Hey, my name is James Nicholson. Welcome to my YouTube channel. In this video, I want to talk about a major lender that's cutting rates. There's also another lender I want to talk about that's putting rates up. You see, yesterday we had a general election called, and it was a little bit of a surprise for some. I think looking at the data, I think Rishi Sunak saw the inflation data as probably the best that it's going to be in the next few months. And so he's giving it a shot and seeing if he can stay as Prime Minister. Now, because of that, we're going to see some uncertainty in the mortgage market for at least a few months. And so swap rates, which are the rates that your lender, your bank borrow from. So Barclays, HSBC, NatWest, they borrow from bigger banks, for example, and they have to look at something called a swap rate. They've gone up marginally. So even with them going up, it's interesting to see that this lender has actually dropped their rates. So before we jump into this, as always, make sure you do subscribe to the channel over there and hit the bell notification. We're on the way to 24,000 subscribers. We've had a crazy amount of subscribers in the last month. So do subscribe. And while you're here, smash like, tickle like, do something to that like button over there. That really helps me with the YouTube algorithm. And it just means you're an all-round great person. So do that right now. So who is dropping their lending? Well, Halifax is the lender. Sure you know that. And so, yeah, Halifax is one of the major 6 lenders in the UK. And why are they dropping? Because their rate, the money that they borrow at, has actually got a little more expensive due to the general election and due to the inflation data. Well, what's happening at the moment is transaction volume is slowing down again, unfortunately, meaning houses are selling slower. So we had the beginning of the year, January and February, was really busy. And that was due to the fact that we had a bit of a mortgage price war. We had people that sat out the market in 2023 that just really wanted to potentially do a deal, but didn't for some reason. And they felt that they would wait for lower interest rates or wait for house prices to crash. Neither of those things really happened. Then in December and January, things started getting a little bit cheaper. So mortgage rates started going down. And they were all fighting over our business because there wasn't much of it about for them. So that meant that the market got really, really busy. Then we've had April and May where rates have been actually going up just due to the fact that the inflation has been sticking around and we haven't had a cut in interest rates from the Bank of England yet. And so rates started creeping back up and that slowed the market down. So there's a few things that are slowing the market down. One is there was a leak that potentially we would have a stamp duty cut. I think now that the general election is actually going to be sooner, I think that one probably won't happen. And so that can be crossed off the list for now. Doesn't mean Labour, if they win, might do that, or the Conservatives, if they stay in power, might consider that. But right now, I'd say park that one. But people heard about that, so they want to wait and see what happens there. There's another camp of people that are watching YouTube channels and reading the news and feeling that the market's going to crash 35%. So why would you want to buy a house for 500 grand if you can pick it up for 350 grand a few months later? And so there's those people that are just waiting for prices to go down in the hope that they can scoop a bargain. Then there's other people that they're not necessarily so fussed about the actual price of the house, but the interest rate is too high for them, and that means affordability doesn't necessarily work, and so they are waiting for the Bank of England to drop rates. So there's all these people sitting on the sidelines, which has slowed the market down again. And so banks this week have started to cut rates, and Halifax is one of those banks that have done that. And so they haven't done a huge drop, but this comes into effect tomorrow. And so the rate is down 0.19%, which is worth having, right? It is worth having. It's not going to be an absolute game changer, but it is worth having. And it does improve affordability for some people. Might mean you can borrow 3 or 4 grand extra on a property and actually win if you're bidding on something. So that could potentially be good. Now, what is also keeping the rates potentially higher? So once we had the inflation data, it was kind of ruled out that it's quite likely now that interest rates will not drop in June, even if we get some more good inflation data, because we've got the core inflation, which is goods and stuff like that, is not budging much. It's gone down a tiny percent. It's under 4% now, but it's still relatively sticky. And we've got services inflation, which is also a problem, and that's relatively sticky as well. And those are the two things that the Bank of England are wanting to see drop. Until that happens, you might not see an interest rate drop. Now, today, the data is changing again. And so what's happening today is that a lot of the analysts are now ruling out the August rate cut as well. And so that means that you could be waiting even longer. Now, what do we expect to happen? If we don't get these rate cuts, then interest rates could be quite volatile in the next few months. I think at least until the election, or till it's clear who's likely to win the election. I know if you look at the polls, it looks like Labour's going to win in a landslide. So the markets will want to see what policies are Labour going to campaign on, and what message have they got, and what are they expected to do, and they'll figure out what they feel the swap rate should be at that stage. And I think you'll see volatility for at least 8 weeks now. And so you might see interest rates going up, but you also could see them going down as well. So we don't know for sure which way, and no one has a crystal ball and can say, are they going to go up? Are they going to go down? I don't think that's going to happen. Now, personally, what I think that will do is slow the market down even more. I think that if the rates start going up next week, even if it's as little as 0.25%, as in the mortgage rate that you borrow at, it means more people will just abandon deals, they'll get out of stuff, and they'll wait and see, and they'll wait for those interest rate cuts again. And that isn't really what anybody wants in this market. And so this is giving more uncertainty, and uncertainty isn't good news. It doesn't give people the confidence in order to invest and buy something. They're just going to push those transactions till the end of the year. So I think you're going to see a big slowdown in transactions. I think you're going to see volatility in interest rates. And I think that potentially that could make house prices go down a little bit, because there's going to be people listing right now that do want to sell. They're realistic about what's going on in the market. And because there's an election coming up, they might want to sell before that happens. And so maybe they'll cut their price. Not every seller's going to do that, but I think these are the things to watch. House prices, mortgage rates, and all the data you can get on inflation. So it's definitely a strange few weeks for sure. Let me know, what do you think is going to happen? Do you think Halifax, they've dropped? Do you think they're going to go back up quite quickly with those guys, or do you think they're going to keep it there? Do comment below. Do smash that like button. Do subscribe and hit the bell. Check out all the other content on my channel, including this video right here.